Good morning, traders and investors. Roger Scott here, senior strategist for The Trading Pub. I like how that sounds. It's rolling off my tongue now. It's Tuesday. It's October 17th. Let's see what time it is. It's about 7:42 in the morning. The market's not going to gear up to open up for an hour and 40 minutes. I'm here just a little bit early. Just couldn't sleep last night. As you can see here, the market's down a little bit here. The Dow's down 76 points. This is random. That's not a lot of movement here. But the Nasdaq is down about 50. That's getting into non-random territory because the value is only 15,000. It's less than half of this. So this would be equivalent to the Dow being down more than 100 points. Anyhow, anytime the Dow's down over 100 points or up over 100 points, say 110 points, that's beyond randomness. So in the case of the Nasdaq, it would be about 50, 60 points. Before I get too deep into this class or into this session, excuse me, I don't even know what I'm doing at this point. I'm always doing something, right? People calling me Roger Rabbit. What I wanted to tell you is subscribe to our Telegram channel. If you don't know how to, you could find the link below this video in the YouTube channel. The YouTube channel is Roger-Scott YouTube channel. And visit our VIP room. It's free for the time being. I'm going to be closing it up real soon. This is a great time for you to join and get some free trades. We're doing a lot of swing trading. And don't forget my Telegram channel. Go to rogerscott.com/Telegram or hit that link under the YouTube channel. It's all there. And if you're short WBA, Walgreens, and maybe even Moderna from yesterday, I'll take care of you guys. I'll talk about those trades in the Telegram channel. I'm probably going to close them out at a profit this morning, both of them. If you still have Moderna, I know a lot of you liquidated it yesterday. All right, let's get into the nitty gritty, right? So as you can see here, the Nasdaq's down, the Dow's down. We have today retail sales, which is a very, very important report, especially in light of earnings season. Although I think earnings are controlling the market right now because that's the major, there's no real fundamental data aside from the Middle East and the turmoil we're seeing in China, but that's kind of baked into the market. Earnings are not. But retail sales is very important because it makes up a huge portion of the economy, and we have a lot of retail stocks that are going to be reporting. X vehicles and gas, if you look here, they're looking at a very modest decline, actually. And if you look at X vehicles month over month, notice it's a decline. They're looking at a decline in every area. That's bad. That's not good, especially as we head into New Year's. We'll see what the numbers are, but they could really drive the market today in terms of market sentiment. They can add to the tone substantially. That report's coming out in about 45 minutes. It'll come out right around the time you get this video. Definitely, you'll get this video and the report about an hour before the market, so you'll be able to make your way. But notice the difference. Notice how big the spread is. Negative 0.1, positive 0.5, positive 0.1, positive 0.6, negative 0.5, positive 3. They're kind of all over the place. And the fact that they're lower than last month is not a good sign, not good for retail sales. The other report you're going to be seeing about 15 minutes before the market opens is industrial production. Industrial production stocks you want to pay attention to, especially the manufacturing and the capacity utilization rate. This is important because industrial stocks are in play. There's a lot of industrial stocks working overtime because of the energy prices, because of the Middle East right now. A lot of the defensive stocks are industrial stocks. So pay attention to that report too. On top of that, you have Fed speakers. You've got Barkin. You've got Bowman. I like Bowman. She's pretty straight up. And you have Williams speaking. We'll see what they have to say. And tomorrow you have the Beige Book. That'll be very interesting. That's happening at 2 o'clock. And you have a whole bunch of speakers. And tomorrow we've got housing starts. So we'll be looking at the real estate market tomorrow. Aside from all of those good things, earnings, and earnings. You've got Johnson & Johnson reporting today. I don't know if they're reporting before or after the bell. Let's just take a quick look. J&J. We'll know in a second. Well, I'm not sure. Hard to say. Let's see if they reported already or not. Stock earnings. Yeah, so they've already reported. So they're not looking bad because they're positive now for the session. Okay, well, that's good to know. That's good. That's going to give the market a little bit of a boost. That's nice. I like that. Let's look at other stocks that are coming out with earnings today. You've got Albertsons, Supermarket, Bank of America, Financial, Bank of Mellon, Financial. I don't know what Hancock, Hancock Whitney's Financial, Interactive Brokers, Financial, Transport Company. So you got some industrial stocks there. Lockheed Martin, defense and industrial stocks, Pinnacle and a little airline. Now, airline stocks are they're very incestuous. They like to impact each other. So if one airline stocks gets hit, keep an eye on all the airline stocks. Matter of fact, I'm going to take a look. Whereas financial companies, if Goldman gets hit, it doesn't have as much of an impact on other stocks. But I don't know if it's definitely not coming out right now. It's probably coming out after the closing bell. But boy, oh boy, look at this trend. Airline stocks have not been doing so well. Aside from that, you've got Netflix and Tesla tomorrow. So everything turns to large cap tech tomorrow. We got to watch tech very, very carefully in light of all of that today. Now, let's talk a little bit about technical trading action, and then we'll get into the fundamentals. I like to mix it up a little bit. So if you look at the SPY, which we're going to look at right now, you could see that we're in a twilight zone. We're between the 200-day and the 100-day moving average, or between the 50-day and the 200-day, since the 100 and the 50 are crossing each other. So they're pretty much doing the same thing. We're also bouncing off. It seems like we're bouncing off of this resistance level. Now, if we broke through this resistance level, well, we would have a lot of different conversations. But as of right now, it's very hard to determine the direction or it's very hard to determine the trajectory of this market. Try saying that 10 times at 7:30 in the morning, or it's about 7:48 in the morning. If we don't see any upside catalysts next couple of sessions, this will go down. Right now, the bears and the bulls are doing this. They're trying to figure out what they're doing, and it's been it's been just a slow grind. Yesterday's trading session, if every day was like yesterday, day trading would not be fun at all. Last week, it was fantastic. We had follow through. Yesterday, I mean, look at this trading session yesterday. Here, let me take extended hours out of this. Look at this. Yeah, good luck. Good luck trading on this. Look at this. This was fine right here. And then, I mean, this is like, it's like watching glue dry all the way from 11 a.m. yesterday, all the way till the end. I mean, it was painful. It was painful. So if you're curious why yesterday's trading day was so boring and so different compared to the previous week, it's because the market did literally nothing from 11 a.m. I mean, literally did nothing from 11 a.m. So, but going back into the big scheme of things, I think we're in a sideways trajectory right now on the SPY, and we need wait and see to break through either to the upside or downside. Nasdaq, much of the same. Now, I'm not expecting this in the Nasdaq after tomorrow, because we have Netflix. Look at this, Netflix and Tesla and Abbott Labs and ASML, Alcoa. So I think we're going to break out one way or the other. But as of right now, I mean, look at this. Holy moly. Nothing. And the Dow, if you look at the Dow Jones, you will see that it is above the 200-day moving average, and it looks like it wants to break out because defensive stocks look like they're starting to lead, which is a positive sign. Energies. So tech was leading. Now it looks like blue chips are leading. And we'll confirm that in a minute. Look at energies. They're not looking bad. They have a pretty good trajectory. And as I said, I think that energies are going to be in play till this fiasco in the Middle East at least is tame. Now, let's look at sectors. Over a 3-week period, tech. But look in the last 5 days. Utilities, real estate, energy, retail, financial, consumer staples, the most defensive stocks with the Dow leading, and technology, QQQ, below the S&P 500. So the last 5 days, technology has not been leading. Utilities, real estate, energy, retail, financial, consumer staples. That's the Dow Jones. So keep an eye on these sectors. Keep an eye on every sector, but I want you to know that there is a major fundamental change. And you could even see it right here. Look at the trend in utilities the last few days. Higher. I like utilities right now. I may be liking real estate right now. I love energies right now. I still don't like retail. I want to see us get past a certain level. But you could see here that if you look at QQQ, notice inside day yesterday, right? Look at communication, still inside this range, right? Look at technology, inside this range. But look at healthcare, popped up. See that? Look at real estate. This looks pretty strong. Utilities definitely look strong. And where's consumer staples in all of this? Where's consumer staples? We've lost consumer staples. Here they are. Not there quite yet, but I like the Dow. I like how the Dow is moving right now. I would be focused on the Dow today and stocks like sectors like energy, real estate, and utilities. That's where the money is. And financials. Financials are doing pretty good too. You don't want to short those sectors right now. Now let's talk about fundamentals, and I'll wrap things up for you today, all right? So, quarterly reports from big banks, industrial stocks, retail sale, all that is on the table. New York Empire State Manufacturing came in weaker than expected. Harker reiterated yesterday that central bank can maintain its benchmark rate steady as long as there's no abrupt shift. And that's partly because the bond market, and this tracks the bond market, is coming back down. This is bad for tech. This is one of the reasons why tech is sucking it right now. Really, really bad. We now have a 30% chance of a 0.25 basis hike in December. More likely than not, it'll happen in January or February of next year. We've got a lot of earnings, including Bank of America, Lockheed Martin, Johnson & Johnson, United Airlines, Goldman Sachs on the table today. Going to be watching those earnings like a hawk. Retail sales, core retail sales, industrial production at 9:15, manufacturing production, that's going to impact those stocks. Europe is down a little bit. They're keying off of U.S. corporate earnings while also maintaining cautious ahead of U.S. data. They're really keying off. Europe has been keying off of us, and so has Japan. China closed higher. They're trying to do anything to spruce their economy. Share buyback plans. Numerous China-listed companies revealed their intentions on Monday to repurchase shares or cancel stock-issued plans following a series of measures enacted by authorities to bolster struggling stock market. I like that. We need that. Japan closed higher, tracking overnight gains on Wall Street as investors grew more optimistic that the Israel-Hamas war would not significantly impact the markets. Really? I don't know. We're down overnight. I don't know. And energies are up. I don't know about that. I didn't get that memo. Not a lot of stocks in the news outside of the stocks that we have to focus on earnings today. Remember. If Goldman Sachs has earnings, it's going to impact Morgan Stanley. If Lockheed Martin has earnings, it's gonna impact Northrop Grumman. If Bank of America has earnings, it's gonna impact Chase and Wells Fargo. It is. And if Johnson & Johnson has earnings, it's gonna impact Moderna and other healthcare stocks. That's the way the balls bounce. You can't do anything about that. I already told you I'm a lot more bullish in the blue chips right now than technology. I like energies and I like utilities. And I actually also like financials. Financials, utilities, real estate starting to prop up again, and energies. All those other sectors, I would be very, and healthcare. I would be very, very cautious right now. I think the Dow is going to lead in the near term. Now, strongest, weakest sector, I think we've covered that already. But the strongest sector, without a doubt, is energies. And if you want to trade energies here, let me show you how to do it. You can go to XLE. You can go to options price. I think they're going to stay elevated for quite some time. Go to 2 days before my birthday, 10 days left. It'll give you enough juice. And go right here, 89.50. Go in the money. Don't do this before the opening bell. The spread is going to be as wide as the Grand Canyon, but then it'll be narrower. It'll be, the 89.50 it's about $2. The 89 is about $2.30. But go in the money a little bit so you get a little play. You get a little bit of a bump, and you get a high delta, which means for every dollar it goes up, you'll have an equal amount of gains. All right. I think I've said enough. Before I let you go, troubles in Middle East, market selling off back half of last year. There's no telling what's in store for us this week. But the story's much different for Google and parent company Alphabet. That's right. Or at least according to my study, it's been for the last 18 or so years during the third week of October. Thanks to my research, this trend has led to a 77% win rate on actual issue trades, not some backtest, actual issue trades. I believe we'll see Google surge this week, so I'm holding a special live session today at 1 p.m. That's right. Follow this link below this video, and if you're in the YouTube channel, find it in the Roger Scott YouTube channel. Just go to search in YouTube, go to Roger Scott, and look below the video. You'll find everything there. Lock in your seat. It's happening right after VIP room at 1 p.m. today. It's going to be a great time. Bye, guys. If you have any questions, Roger@rogerscott.com. keep your eye on the Telegram channel. It's been explosive lately. And from the word on the street is, it's actually helping people make real money in real time. But imagine that. If you're short WBA, I'm going to take profits hopefully on a little pullback today. And I'm kind of hoping you're still short Moderna because I didn't really want to sell it off. My assistant sold it off yesterday without my consent. No, it was Clyde. Yeah, that's the ticket. It was Clyde. When something goes bad, I always blame Clyde, my cat. Anyways, I'll see you guys later. Have a great day. And if you're still short Moderna and WBA, I think we'll have an opportunity to liquidate it today, hopefully at a profit. And I'll see you guys later. Reach out to me, Roger at rogerscott.com.